Hi, this is Shane with The Rational Trader. It is Tuesday, and I had one of those days where I got nicked here. So in gold, we take a long here. Don't quite get enough here to get to scratch. So take a loss there, and then you can see I had a nice signal there. I didn't get filled. I got touched, but not filled. So there's a nice little move there I missed as a result. And then this is the really painful one where I got long here and then got nicked right there to the tick. So it's the kind of thing that if you're watching it when it happens, it's just absolutely agonizing, like stick a screwdriver in your ear, painful. And, you know, because it's a machine learning system and it's just auto trading and I'm not even looking at it, it's slightly less painful because there's no, you know, run up to worry and then you're thinking about it all day afterwards. You just come back at the end of the session and you're looking and going, oh man, look at that. So there's just one input to my emotional machinery instead of the many hundreds if you were sitting there watching that trade. So that's the only good thing about that happening. It's very difficult to deal with this problem, all right, because you're basically, it is almost like Brownian motion in the market. It's just random price variation. I do want to point out one thing. I've noticed that this is a range bar, right? So the range bar is you don't form a new bar till a price trade. So you could have, you know, a very small amount or a very large amount of volume in any of these bars, but you don't get a new bar until the price level above the range of that bar trades. And so it gives you a very clean view of price and what price is doing. And what I've noticed is that this level here on the signal bar will often get tested to the tick. Sometimes one tick beyond it. And as a result of that, or that's an input that led me to where I'm at right now, which is I use a 5-tick range bar chart, but a 7-tick stop to deal with that. And I've seen it a bunch of times where it'll come back down and it'll test this level, even maybe nick it, all right, and then go your way. And so that extra couple of ticks down there is enough to a couple of ticks below the bar level is enough to help you survive that. In this case, it was just a hint more. There's nothing to do about it. It's a tough call because you want to get into the move, but you also need to deal with this possibility. So sometimes the market just goes right, and other times it pulls back like this, like you see here. And so you're trying to find that balance. I have the analytical tools to understand that using a bigger stop over a long period of time, 3 to 6 months, is not more profitable than taking this stop here. All right, so we have to find that balance between, you know, how much we're willing to risk, all right, versus the profit potential. And it just is what it is. It's painful and it hurts and I hate it, but it's life as a trader and it's something you got to deal with. Take a quick look at the other markets. 5 ticks in the euro, which I believe happened overnight. So let's go check that. Yeah, so in fact, I remember looking at this in the morning going, wow, this is kind of ugly looking trading here. Ugly looking market, and so you feel fortunate that you didn't get chopped to pieces there. Instead, that's an actual 25 tick move. We're trailing by 20 ticks, so we only got 5 there. And then I didn't look at it the rest of the day here. So we're outside the value area starting here. Right, here's the value area low. You can see what happens, right? You get down to it, and there's a fight or there's indecision in the market. And before it finally breaks. And so now these blue bars I'm now looking, even though I don't have a low volume node. This is what I'm testing here in March. Here we pull back cleanly right here. So this is fine. we get a bunch of cases where we don't pull back like that. So I would be happy with, okay, I pulled back there and we took a look and didn't see anything. I was unhappy with the number of times that I didn't get this pullback here, this pullback here, right? Which is why I developed the model. So you can see we're looking all through here. We're looking all through here. Here's a good example where you pull back just a tiny little bit. And the low volume node forms afterwards, so you don't have an opportunity to get in there. So at least now I'm looking. I have a chance at that. That's a nice downfall right there. And then I think that's it. There's another nice move up right. This is tough here, in through here. That's tough to trade that. And then there's a nice up move there actually as well, just after 9 o'clock-ish, but no signal. Okay, and then let's see, in oil, I think there were two trades. One we got short here, and we're just getting caught in some thrash here, unfortunately. So we broke out of the value area, pulled back to it, and then this says, I don't think that pullback's going to succeed. Get short. You can see it's ultimately correct, but it doesn't help us here. It thrashes around a bit at the previous day's high, which is kind of interesting. Stay out of trouble at the POC here. You break lower and then get short there. This was really interesting. I actually saw this happen. I was sitting here, and the short is right there. So you would sort of expect to get a bigger piece of that, and it's not. The chart doesn't actually draw correctly what happened. It's really interesting, because what we do is we move the stop to entry plus 5 at plus 10, and plus 10 doesn't look like it happens until down here, and yet I saw it. I saw the order placed, I saw it get filled, and then within a second, very quickly, the market popped down and popped back up. And as it popped down, the stop moved to entry plus 5, and it popped back up and stopped me out. And it may be that all that happened so quick that the chart couldn't keep up. And what actually happened is the market moved down into here with the stop moved, and you can see the top of this bar is right there. So it's almost like a reverse nick there. The top of the bar is right there, and so but the little triangle here is drawing in the wrong place. That triangle looks like it happened on this bar when I think what actually happened is the market fell down to here, crossing my 10-tick threshold. Stop moves to entry plus 5, and then it popped back up. Took me out right there, and then fell. Again, this is a case of just the something that you won't see in the data after the fact. It happens in live trading. It happens, and so you might see it in the replay. It kind of depends on the resolution of the replay. I won't see it in my kind of the way I do the analysis. Like my analytical program that would see this trade would consider this a bigger winner than just 5 ticks. So that's a limitation of the that analysis program, because I only look at it bar by bar. All right, so I'm assuming if I got filled there, that I'm not going to get taken. I'm not going to get stopped out there on this one. That's the price we pay for an analytical program that'll run in seconds instead of hours. There's something to keep in mind. So this is unfortunate. It's like so I missed that piece. I missed that other piece in gold. It's kind of a rough day here. And see, I think that's it for oil. There's a nice move up here, actually, off the value area low. I don't get a signal there. Back to the POC, you'll notice, and then it can't get through there. And then it just gets kind of a little bit ugly there, doesn't it? Yeah, and then it just shot sideways. All right, so that is it for today. day. We'll see what tomorrow brings.